What's up, everyone? I'm Nick Campo. This is
Big Boss Ben.
And we are
the Loan Guys
podcast. And we are coming to you from NBI Financial Group. That is our mortgage broker shop that we started together almost 1 year ago. And we have dominated the industry. For all the people who are too sensitive to hear that, yes, we're doing very well. Campo Media Group Studios. If they haven't done it yet, one, thank you for being here. If you have not done it, do a couple of things for us. Go ahead and bang that red subscribe button and turn on your notifications. That way you know every time we post a video. Our YouTube is going to start growing. We've got Donovan. He's crushing our social media. We have one video with over 60,000 views on TikTok. Hello, haters. Donovan's next focus, YouTube, which he's been focused on, but we're going to start growing YouTube and doing big things there, and we're going to be doing giveaways and contests. We are probably going to be canceling the St. Patrick's Day giveaway because we didn't have anyone participate. But we'll get some people participating, and we'll do a big-time giveaway, and we're going to do one where we're giving away cash. But
bigger giveaway for next time.
Right. If you haven't done it, do us a favor. Go ahead and subscribe to our channel. Turn on the notifications. Also, go and follow us. We're NBI Financial Group on all of our social media channels. Go ahead and hit it, Ben. What do you got for me?
So it took you a second there in the beginning. I think been a couple weeks.
Yeah, so the last podcast we shot was the Friday or the Wednesday before I went out. I have a new baby.
Congratulations to Nick.
Thank you. Appreciate that. I'm a girl dad now. So I've started lifting weights.
Yeah.
Just in case any boys come to try to mess with her when she's 16. So I figure I have about 16 years before I have to worry about boyfriend, girlfriend.
And he's going to she'll have an older brother.
Yeah. She does have an older brother, and he's in jiu-jitsu now.
Yeah.
So
there you go. Getting him ready early.
Oh yeah. So what do we got?
So want to kind of get it right off into it. It's been a pretty busy week rate wise. A lot of changes in the rates.
Almost like a roller coaster.
Right. So kind of want to start off earlier in the week with the big news, with the Fed having an announcement saying that they are likely to continue rate hiking, saying that they still they believe for an easy landing they still need to increase it, and we're looking at an expected increase of another 50 bips.
Did you watch what Jerome Powell said when he was testifying before Congress?
Which time?
This week?
Yes.
And they pinned him down, and long story short, basically what he said was they don't want people to lose their jobs, but because our federal government keeps printing money, they're putting more money into the economy, which is causing more inflation. Because it's causing more spending, which is causing more inflation, which is now forcing them to have to hike rates, and they're having to drive us more and more towards where people either aren't hiring or they're going to be layoffs in order to stop spending. So because your government, the American government, and the people in Washington, and this is all parties, it isn't just the left, it isn't just the right, all parties do it because they overspend and they pump money and they print money, it is now going to cause Jerome Powell to be forced with something that he doesn't want to do, and it's to force...
That's true.
But I also think that they're a little bit reactionary because the interest rates are going to come down because the housing numbers are lagging.
And correct. And they keep bringing up that the economy still looks stronger. It still looks stronger than expected. But that is an extremely shallow, in my opinion, view of the numbers. But taking a look at actually what that caused. So that caused a 30-year mortgage increase, average increase from 6.72 to 7.05 from when that announcement was made until yesterday.
So the 30-year par rate.
Correct.
Okay.
Went up, yes. So that means that's 5 straight weeks of mortgage rate increases. Yet, however, this week mortgage applications still have increased, showing that people still believe and know rates are going to come back down.
Well, okay, maybe, right? So, yes, they are going to come back down. Yes. I don't know if it shows that because I think a lot of the news cycle and stuff that you're seeing, how cyclical is the year-to-year housing market. Every single year, December through February are extremely slow. March starts picking up. April, May, June, July, August, basically through October are busy. November starts to slow down, but you're trying to finish up everything from October and get into
Absolutely.
November. And then once you hit Thanksgiving, people stop working in this industry. Right, realtors stop working. Mortgage loan officers, if they aren't top producers like myself, they stop working. And that was a pat on my back and a dig at all those people who stop working during the holidays. But spend time with your families. I appreciate that. I do that too. But long story short, it's cyclical. So we are doing what? We're getting more applications because why? We're heading into what? Purchase season. Hate to burst your bubble. So rates don't necessarily always affect purchases. Household formations, 1.9 million new household formations.
Right.
We need 1.9 million families need a place to live now.
We need more.
We need more housing. So let's not even get into the housing, but let's talk about why maybe purchase applications are picking up regardless of rates. Buying your first home is not rate driven. What is it? It is life event driven. This is a life event. Whether or not the interest rates come down, the interest rates were what? 20% at one point in the past, 14%. Right. My parents' first mortgage was 11 to 14%, something in that range.
Think my parents were 12.5%.
12.5%. They were buying a house because they had what? A family.
Right.
And when you have a family or a household formation, you want to live in a house. And anybody who knows anything, who has just a little bit of financial literacy, knows that buying a primary residence is smart. It's a way to build wealth. Grant Cardone, you're an idiot. No matter what my TikTok followers say, you don't need $1 million in your bank account to own a home, and you should own a home before you have $1 million.
You absolutely should. I don't understand the argument why not to. But after that announcement, as of today, we have seen 115 basis points improvement in mortgage rates
for over the last 2 days.
Yes, starting yesterday through today.
Hey, lenders, you know what that means? Float down. We've changed by over 100 basis points since loans have been locked in. So you're either floating us down on our interest rate, or guess what? We're finding another lender. All right, Ben, anything else?
We'll kind of get into the reason why, because the job reports claim, first off, came out this morning.
It came out.
Well,
go ahead.
More clarity at least came out this morning.
Yeah, no, it came out a couple of days ago.
Right.
But the clarity came out this morning, and anybody who knows anything about the job report and pulled the numbers together, was it the CPI or ADP?
No, ADP. The CPI comes out next Tuesday.
Next Tuesday. Okay, so
and that's the big date. Yeah,
you can tell I've been on baby duty.
Yes,
a little rusty.
But yeah, so I mean and what you're saying a couple days ago, because it was $311,000 job creations. Mm-hmm. In the month of February.
Break those numbers out, because that's not true.
Right. So that's a massive increase from what everyone was saying it was going to be.
Which caused the rates to go up.
Correct. And you have everyone over here. I mean, this is even 2 hours ago, POTUS Twitter just put out a tweet saying, oh, look, hold on, let me read exactly what it says.
Yeah, I want to hear. Who's POTUS?
President. That's the president's official Twitter.
President of the United States?
Yes.
You're trying to tell me that Joe Biden can't ride a bike, but he's tweeting? Did you see him fall off the
someone
bike?
Tweeted. He said, some great news this morning. I'm happy. This is 2 hours ago. Some great news this morning. I'm happy to report that our economy has added 311,000 jobs last month.
Can I stop you right there? Is there more to that tweet?
I mean, that's really it.
Okay, so 311,000 jobs we added last month.
Right.
So I want everybody to understand, and every presidency, and Joe Biden just happens to be in office, but if Trump had tweeted this, I'd be saying the same thing. It shows how shallow they are as people, because they're literally lying to you, right?
Right.
So I always say, like, just because it's not an outright lie doesn't mean it's not a lie. You're manipulating the number, and you're not giving people the whole truth. So they're looking at that, and the people who have jobs, moms and pops, and, brothers, sisters, aunts, uncles, whatever, that are working hard, 40 hours plus a week, grinding, and maybe they aren't interested in stuff, but they see that tweet, which is a very short tweet that isn't super informational, and you know what they say? They say, oh my God, he's doing such a great job. He's creating jobs. But let's look at it. And if Trump had done the same thing, I would have called it out, and he did do stuff, and I did call it out. So I just want everyone to understand. I'm not saying this from a political standpoint. I'm saying this from an anti-politician standpoint. Let's tell the truth.
Right.
Because that 311,000 is a false. It's
a big false, because
what do they call it? False flag.
Right. Because you have to look at the amount of people in the labor force. So regardless of how many jobs are created, if the amount of people entering the labor force is higher than that, unemployment's going up.
So how many people are entering the labor force?
So at the total net at the end of the day is there's 343,000 more unemployed people from the end of February than the beginning.
So 343,000 more people are unemployed.
Correct.
And there's 311,000 job openings, but let's go one step further. Right? You might not have this data right here, but I might want you to look it up. One step further is, are wages increasing, decreasing, or staying the same out of those 311,000 jobs? What type of jobs are they? Are they service industry jobs? Are they high-paying jobs? Are they low-paying jobs? The people who have been laid off,
yes,
if they take one of those 311,000 jobs, are they going to be getting paid more or less? Because that's a question you should ask.
Right, and 105,000 of those jobs created were in leisure and hospitality sector.
Oh, nice. So lower paying than like a high.
Correct.
So for example, let's use
people who can't find a job taking a part-time.
Can we use Wells Fargo as an example? We all know how much I love Wells Fargo and
your favorite.
And how honest they are with
They
people.
are your
and
favorite.
if you don't understand sarcasm, here we go. So Wells Fargo, let's use them as an example. You have people in the mortgage industry, and we'll just call it an underwriter whose average salary is about $70,000 plus. That Wells Fargo decided that they're not going to do mortgages anymore, which they should have decided that long ago because they suck at them, but that's neither here nor there. So Wells Fargo lays 4,000 people off.
Yeah.
1,000 of those were underwriters. And that this isn't the true numbers. Don't take this as fact. This is me using an example. Those underwriters making 70,000 plus a year, some of them into the six figures, depending on how much experience they have. Did those underwriters, if they took one of these leisure and hospitality jobs, would they be making more or less money?
Less.
Okay, so you created
less.
jobs, but wages decrease, which means money supply for that family is decreasing. It's a harder living. So you're bragging about, with the president of the United States is bragging about 311,000 jobs created in February, but those jobs
Are paying less.
and we have 343,000 people unemployed.
Right. And the number of average hours declined as well.
Okay. So not only am I going to pay you less,
You're working less.
you're working less. So it's not just a pay cut, it's an hours cut. So it's
Right.
It's boom, 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 boom. Double whammy.
Right.
That was a quadruple whammy. It's been a while. My energy's up. That's a quadruple whammy, but so that tweet is bullshit, is what you're telling me.
Yes. It's not good news.
Wait, hold on. You're telling me a politician is lying, and then
It is cracks showing in
do
the
you know what this is going to be?
employment numbers.
This is my
What?
spin zone. This
Yes.
is my hand signal for spin zone. So this is called spin zone, folks. And every president does it, not just Joe Biden. And I guarantee you, and I don't mean this to make fun of Joe Biden. Joe Biden is not, the light bulb's not on anymore. So I guarantee he didn't tweet this. It was somebody on his staff who tweeted this. So whoever that staff member is, they're trying to spin zone you and make you seem like everything's going so great, because guess what's coming up in 2024?
Another election.
Another election.
But you know, you want to know something else that's not going as great.
No, what?
So on top of it, so let's talk about some additional things to the Fed hiking rates, right? So we always talked about mortgages and how that's affecting the housing market. We've talked about that ad nauseum. Watch any video we've done. But it affects other sectors, including banks. So I kind of want to get into it.
Oh my God, there's a run on a bank out in Silicon Valley.
That's exactly right.
A bank run.
Right.
What? When was the last time we saw that?
Silicon Valley Bank.
Yep, SVB. Mm-hmm. What is it with all these initial people? First you had the crypto guy. What was it? SBF. And now we have SVB, these initials. We're NBI. Are we next?
We might be. But I mean, you got to start to kind of understand it. So you have to look at how banks make money, right?
How?
So because
oh wait, how do banks make money? Ben, get into it, and then I'm going to break it down for the people because you're way too high level.
Well, it's not even.
And no, I'm not calling the people stupid, but I'm stupid, so I have to break it down for myself.
If you heard that, go after him on
come after
social media. He'd love to talk to you about it. All right. So anyways, how banks make money. So when you deposit your money into the bank, it doesn't just sit there. So if you go into a bank, if everyone wanted to go into Wells Fargo right now and say, hey, can I have my money? They can't pay everyone. They don't have it. What do they do with it? They invest it. They turn around and they invest it. And a lot of it is long-term investments, meaning they can't get that money right away. So what happens when they need the cash flow? They have to borrow it. So you have these things where they invested it. They have these things giving them returns from a year more ago that was giving them 2% returns. Now they're going and getting 4 or 5% returns on the money that they're borrowing. They are constantly losing money. That constantly hurts the banks. When they drastically increase, when the Fed is drastically increasing rates, it puts a massive strain on banks. Just the way that the secondary market works. So you have, for example, Silicon Valley Bank, who has been, so they're the ones who a lot of the Silicon Valley, like the tech companies, they're the ones who lend to them. So you have all of their money that they have been investing 2-3 years ago. Guess what's happening now? They're not getting as much business. So they're not generating as much. They are borrowing money to pay people back. And at the same time, they're borrowing that at higher interest rates. So at the end of the day, they are losing.
So they're losing money.
Right. And it's a matter of time before it cuts. And that's what the Fed's doing,
so
is causing
basically
issues.
what you're telling me is this.
Yes.
Well, I don't know if the Fed's causing issues or if that was bad business, because obviously you have your assets over leveraged in one thing, so they're not diversified as a bank. So I was reading a little bit into this. Call me boring, but that's what I like to do. I like to read. So it's bad business, and here's what the banks do. So basically what you told me is I deposit my money. So I have $100,000, I put it in the bank.
Right.
Donovan has $100,000. He puts it in the bank. You have $100,000. You put it in the bank. All of our money, we have $300,000 in the bank. They're taking a portion of that, probably up to 90% based off of what I was reading, because they'll leave 10% on hand. So if you think all the people who have money in the bank, we'll call it $1 billion.
Right.
Sometimes they will take up to 90% of that and they'll lend it out. They pay you. What do you get on the savings right now? Like what is interest earned? Like
19 cents or something now? No, one.
It's like point something percent, right?
Yeah.
So 0.4%.
I think it's like 0.19% or something.
Okay, so 0.19%, less than 0.4, less than 0.2%. So you're getting 19% of 1% in interest on the money that you have in the bank. So they're paying you 0.19% to keep your money in the bank, and then they're lending that out, and they're charging 7, 8, 10%, 12% in certain instances, right? And that's what they're receiving on your money that you lend out. And if we all went into the bank at the same time, they wouldn't have our money to give us.
Right.
So if you've ever one of my favorite Christmas movies, It's a Wonderful Life, where there was a bank run. It's what caused the Depression.
Yeah.
There was a bank run in 2008, which they had to the federal government had to come in and bail people out.
Right.
And save those banks. There was a bank run and a lot of people got hurt. And when you hear about mattress money, a lot of times it's the older generation who lived through the Depression. The reason they leave their money under the mattress or in a shoebox, because banks collapsed. My grandpa used to leave his dollar bills in an old coffee container and leave it in his kitchen up high, so it just looked like a can of coffee, but it had a bunch of money in it, right?
Right.
So it's because, and the sad part is they're taking your money, they're lending it out, and they can't even give it back to you. Now I get it, the bank has to earn money, but when you're over leveraged in one particular, so this bank, SVB, not to be confused with the crypto guy, Sam Bankman-Fried, all these 3-letter S's. I guess we're saying because we're NBI, there's not an S in the beginning, but long story short, they're using your money to make money. I understand the business model. However, you want to be damn sure that bank has the liquidity, and this Silicon Valley Bank is a newer bank, and they did a lot of investing in venture capitalists. They did a lot of investing into startups. So guess what happens when the economy starts shrinking and you're over leveraged in startups?
Right. Exactly.
Right. They fail.
Yeah.
And then you lose your money, and then you want to go get your money, and they don't have your money.
Right. And then what happens? The government bails them out.
Well, the bigger thing is it's not normal people like us either that are pulling the money. It's multi-billion-dollar companies, or companies that have a couple $100 million in there, right? So they're like, and a lot of times they're Silicon Valley people, because they're Silicon Valley Bank. So it might be a tech company that's like, hey, move our money,
right?
Put it in Bank of America, because Bank of America is multi-billion-dollar multinational corporation, right? Worldwide, which they were originally Bank of Italy. They aren't even an American company, just so you know. They rebranded when they came here in the 1900s, but that's neither here nor there. So anyways, there's big companies pulling money, and now if you have your money in there, you're getting nervous, you're pulling your money. And a lot of this, I don't think the bank is in the position where it's going to fail. I don't think the federal government's going to let it fail.
No,
however, a lot of this is caused by fear. If people just stop pulling their money, everything would be okay from what I was reading, but they're pulling their money, and they have the right to do that.
They do. But I mean, you brought up a good point. The federal government's not going to allow it. So what's going to happen with that? Because we just talked earlier in this episode about the government needs to stop spending, to stop inflation, to stop the rates hike. More. So now they're spending more money to bail out people because the rates had to hike so quickly. So I mean, where does it end? I mean,
I don't know. I don't know where it ends. I think it's a continuous cycle, and us, the people, have to. If you're an American, you have to maybe take a look at what's going on with the federal government and say, this isn't working. Getting into more debt, printing more money, driving inflation up, this is not working.
Right.
My answer, where does it end, is with smaller government, smaller federal government, less control, more control to the local and state governments, and then you kind of can make decisions that way. That's my opinion, and that's considered maybe controversial, but that's how we were originally set up as a country.
That's my opinion too, but it's never going to happen.
Why do you say that?
Because look at the way everything's going right now in this country. I mean, do I want that to happen? Yes, but we talked about financial literacy being an issue. People need to look more into things, make their own opinions, and come together and be more educated. We're getting further and further away from that.
Okay, so you're saying we're getting further away from it, and I'm saying we're getting closer to the pendulum swinging very hard back the other way. Because there's only so long you can keep pushing this division in this country before, people sit down and start having a conversation. I talk to Donovan every day. We have a lot of differences, but we get along great. And I know one thing: I want him to live a free and prosperous life, as well as I want to live a free and prosperous life. I want you to live a free and prosperous life, and we're all not prospering together in certain situations. Absolutely. This isn't my opinion and your opinion are different opinions, and it doesn't matter what our opinions are, what our beliefs are. This is not working for a lot of people. And I think people are starting to come together. So I believe in this country, the pendulum goes, wee, and it's going to swing really hard this way. And I think we are there already. And I think it's starting to come back down. And it's still up here. And it feels like we're so far gone. But I think we're a little bit less far gone. I'm telling you.
I hope you're right. I mean, the mainstream media, people buy into the mainstream media still, and
their viewing and their ratings are lower than they've ever been in the history of the world. Since they've been in existence, they are lower than they've been in a long, long, long time. And the only reason that it didn't fall off quicker and people stopped listening quicker is because Donald Trump was a lightning rod, and it kept it kept Fox News, CNN. It kept their ratings super high. MSNBC, all of them. It kept their ratings high. But you look more and more and more. People don't necessarily agree with this. But yeah, it's just that the ratings are down.
Okay. So at that point, I kind of want to give everyone a reminder to hit that subscribe button. Click that notification bell. Make sure to like this video. Leave a comment. Let us know your thoughts on everything. And follow us on all social media. That is Facebook, Instagram, Twitter, LinkedIn, YouTube, TikTok.
Rumble.
And forgetting any other ones?
Not that I know off the top of my
head. Make sure you reach out. I mean, like we were just talking about, we need to come together. This is a time that we do need to come together. So bring up your ideas. Let's have a conversation. Let's see if we can't start moving in the right direction.
We are moving in the right direction. I will say that.
I mean, my thoughts on that are, I agree with you. I mean, my thoughts are a smaller, more localized government, because everything is different. We're talking about housing numbers, right? I just saw CoreLogic is now projecting for 2023, it'll be 3% increasing housing values. That's correct. That, to me, that seems extremely low. But when you're looking at the Carolinas, that's projected 8.6% right now. That's the reason why, because you have everyone is different. Every place is different and needs to be managed and treated differently. Right. Because everyone has their own things that need to be addressed. So if you have localized governments,
everything's
are stronger,
being decentralized too. Centralization of power is kind of going away because we have a voice here. You look at all the YouTube channels. You look at the Joe Rogans of the world. You look at Breaking Points, places like that have the biggest viewership, millions of views per episode per month. CNN doesn't get that. Fox News isn't getting that.
Yeah.
MSNBC. So that's why I say that the pendulum's swinging, and it's going towards more independent sourcing, which makes it more important forever that people vet their sources, because you don't want to fall into the QAnon trap, right?
Right.
Where you have these conspiracy just don't go down that rabbit hole. But when it comes to your thoughts and beliefs and where I think we're heading into more decentralization worldwide, because what you're going to start seeing to fight back against that, because the people in power don't want to give up the power, but the power needs to be amongst the people, plain and simple, amongst all of people, right? And how's that look? That looks like, hey, amongst the community, because you're going to be a part of a community. But it doesn't mean
Absolutely.
if you disagree with this community that you should fight that community. No, just I understand everyone has different beliefs, wants, needs, desires, things of that nature. So
Right.
what's our next topic?
Right. So the next topic, going into lenders, because a lot of fourth quarter earnings have been announced.
They all lost money.
Yes, pretty much everyone lost money. Like UWM and Rocket both very large losses. Loan Depot declared losses again for third straight quarter. Do you think that's going to become an issue?
Yes.
Because at the same time, once they start reporting that many losses in a row, they could lose their secondary market, their warehouse lines to the secondary market.
It won't be for Rocket. It won't be for UWM.
Correct. But you have like the loan depots.
It'll be an issue.
Another one, Home Point. I mean,
Home Point's in trouble.
right. I mean, their CEO just came out and said that selling the company is on the table.
I have it from good authority that they had a deal and it fell apart.
Okay.
So, and that deal, I cannot say this is a true 100% factual thing. I cannot say who gave me the information. It was vetted through a couple of sources who might not actually be in the know. But I think they do know enough where I can comfortably say Freedom Mortgage was buying Home Point and it fell apart because of different reasons. So, if you look at Home Point, man, they went from 4,000 employees, they're down to like 800.
They did, and they still lost $21.7 million in the fourth quarter.
And they're going to lose investors. Like they didn't make any money. Like if you look at their books, they didn't make any money during the biggest refi boom in the history of America. You're operating. How do I say this without being disrespectful? You're operating a business. So Home Point Financial, we go through 2020, 2021, 2022, big time refinance boom. In 2022, interest rates started, going up a bit. Mm-hmm. But you should have been shifting to a purchase focus. They laid off so many people. They had to get their numbers down, They also went public.
Right.
But if you looked at the earnings reports, they weren't actually making money throughout the refi booms. They were trying to eat up market share. But what they don't realize is you're not UWM.
Right.
Your technology wasn't there. So you should have been what you were.
You
were in the wrong segment. Like you were fighting for market share. And from a volume standpoint, they were number 2, but from a profit standpoint, they weren't.
Right.
So what's more important? I'm in business to make money.
Right.
And the byproduct of that is job creation and helping people.
Right.
Helping people get into their homes.
So,
but we could not operate this if it wasn't profitable. Right. So at the end of the day, it's like, what are you in business for?
Right.
Not to lose money.
Right. And you look at, because of the pricing, because there were a lot of companies involved in that. But a lot of it was UWM, who had the best technology, and Rocket, who had retail.
The second best technology too.
And retail to float them, because their retail weren't gouging rates like that. Their wholesale was.
Yeah.
Because they knew, hey, we have our retail to float us, so we can still make money. We can still do that to keep our technology on point while we gain market share. And when we're out of this rate wars, then we keep the market share because we give good service. We show off our good technology. Home Point, I think it was a technology
wasn't
issue.
Losing money though.
It was a technology issue. If Home Point had the technology, they could be in a good position.
If Home Point had the technology to drive the efficiency of the company, they would be in a good position.
Right.
Plain and simple. They would be in a good position. However, Home Point did not have the technology to drive the efficiency, so they have to have a bloated staff. And when you have a bloated staff, what do? You end up laying people off, which
Sell all your servicing rights.
Which I think is almost criminal.
Yeah.
It's not criminal, but think about this. Like, if you have a great technology and you have a smaller, leaner staff that can get the same amount of work done, one person can do the same amount of work as 4 people because you have a better technology and the work is not as hard for them. Guess what? When times get tough, you still keep that one person. They don't lose their job. They can rely on you for a paycheck.
Right.
If you have to bloat up to 4,000 employees and then cut to 800, that's a problem.
That's a big problem.
And that's not good to people. But
exactly.
It's not Home Point. I'm not trying to pound on Home Point today. It's everybody except for UWM that I know of. I don't know if UWM laying people off. Do you?
They have.
They have, really? How many?
A couple weeks ago, they had another.
So UWM's laying people off too?
Yes. Not nearly as many though, and that's the thing. That's the difference.
Right.
Because like you said, there's the times are, you can't count for everything, and UWM lost money too. Like they have to make adjustments, and they're changing their margins.
Would you rather have a high-paying job for 3 years that you could lose when the market shrinks, or would you rather have a medium to lower paying job that you know you're going to have for the next 50 years?
The stability.
What one's the stability? Because
the lower paying job.
Oh, that's stability?
The one that, it depends on where you are at in life and what you're looking at, but
I so disagree with you on this. And this is the difference between me and you.
yeah.
The lower paying job is not stability. I'm sorry to say it. Stability, here's the thing. I would take the higher paying job for a shorter period of time, but live like I was on a lower paying job and then use my leftover money to reinvest in other things to generate more streams of income and really actually create stability. Because if you're working for someone else, it's not stable. You're gone whenever they want you gone. There's nothing stable about that.
There's not, but
there's a difference in mindset.
It is.
Listen, Donovan, you know what I want? I want sharks. I want cheetahs. I want people with the mindset to say, hey, I need to create multiple streams of revenue that make sure I'm always insulated, that I'm always okay. Hey, I need to hunt and go out and get it. I don't want somebody who says, I want a low-paying job for stability. So, Ben, you're fired. I'm just kidding. You're not fired, but change your mindset, dog. But anyways, what's next, Ben?
So, switching gears to get some more news in the mortgage industry. So EPM has filed a counterclaim against Jesse Owuji Motorsports.
Good for EPM.
I think so too. Looking
it allows
more into
for
it,
discovery too.
Yeah, it does. And looking more into it, it. So the story here. So Eddie Perez, the owner and CEO of EPM.
Shout out Eddie.
Yes, he wanted to support. He basically said, look, he went out there.
John Lyon.
He saw Jesse Owuji Motorsports. He said, I really fell in love with Jesse Owuji's story. He's military, minority, out there working, get into a sport where there's not very many minority people in that sport. Mm-hmm. It's backed by Emmett Smith as well.
Love Emmett.
Right. He's like, that's Cowboys. Who I want to support. He's like,
bah, damn Cowboys.
Basically said, I want to support this driver. So they came to a 2-year agreement.
Who was the driver? Was it Bubba Wallace?
It was Jesse Owuji.
Oh, it was Jesse Owuji was the driver?
Yes.
Okay.
So they came to that agreement because ex-military was part of it too. Mm-hmm. And went great for like the first year and a couple months. Then all of a sudden they switched drivers. They just said they weren't scoring enough points, switched drivers without anything from EPM. EPM was like, all right, well, we're backing out of this because we wanted to sponsor this driver, not the car, not the team, the driver. That's no longer part of the agreement. We're backing out because you violated our contract. So that's the disagreement here.
A couple of things on this.
Yes.
Good for Eddie Perez for filing a countersuit to get his side of the story out, because you don't want this battle in the court of public opinion. We want this in the courtroom and let the courts settle it, because then you're going to get the actual facts for the most part.
Right.
So good for Eddie Perez, who's also a minority, who also was trying to support the military, who was also trying to support a minority driver in racing, which there's not a ton of. Eddie Perez has every right to, if the story is true, he has every right to pull out of the contract, because you sponsor somebody to get eyeballs on your company. You think that's the way you're getting eyeballs on the company. That's what you wanted to support. If they weren't scoring enough points, the motorsports team has every right to change drivers, because at the end of the day, it doesn't matter if you're a minority or if you're a white person. It doesn't matter.
Right.
Your job is to win. So if you're not winning, they're going to replace the driver. But EPM says, you know what? We're not getting the publicity. This is what we want to sponsor. We're going to go our separate way. So why are we doing this? Right? It should be, to me, it's like, okay, yeah, this is what I want. Okay, yeah. But what's the contract say? Does the contract say, hey, if we switch drivers, you can drop your sponsorship?
I don't know.
Probably not.
Yeah.
Or else there wouldn't be a lawsuit in the first place. I'm pretty sure that the motorsports team has smart enough lawyers to know that
it's probably supporting the car regardless of who drives it.
Right.
And
But yeah, good. This will be an interesting one for us to watch.
Yeah, no, that's very interesting. I'm kind of, because I get it from, like I said, legally, probably so, but I also completely understand where Eddie Perez is coming from.
Right.
So at the very least, this countersuit gets the news out there.
Yeah, it gets the news out there, and it's spinning it both sides are spinning it to where they want the public to see it, and they're trying to battle this in the court of public opinion within the mortgage industry and so on and so forth. But to me, it's like, hey, as a business person, should I read the contract before I sign it? Because if you're sponsoring the car and not the actual driver, and I have a feeling you were sponsoring the car and not the driver if they filed the lawsuit, the contract had to be written in that sense. So you should have reviewed it, and if you wanted to sponsor the minority driver, the sponsorship should have been for that driver and not for that actual team.
Right. So, yeah. So do you think the market had anything to do with that?
Because that's what the rumors were.
Right.
So I don't want to spin this in a huge positive light.
They changed it in May 2022.
The market had a lot to do with it.
Right.
Do you remember the original stories? We talked about this a while back on the podcast.
Oh, I do remember.
The original story was there was a margin call.
Yes.
And then basically Eddie Perez, the owner / CEO of the company, and his like right-hand man had two different answers to the question, which were on opposite ends of the spectrum. So they weren't on the same page. To answer your question, the market had a lot to do with it.
Okay.
Duh.
Well, I mean, I know that, but you're talking about the contract. Oh, you should have reviewed the contract if that's exactly what you wanted.
Right.
But
so what I'm saying to you is I don't believe
Eddie
Perez.
Okay.
That's my opinion. I don't believe Eddie Perez. I want to know what everyone's opinion is in the comment section. Like, take this clip, put it out there. EPM sues Jesse Ujamoji's, right? Is that how I say it?
Yes.
Motorsports team. Because he's saying he sponsored Minority Driver. They changed drivers because that motorsports team was not scoring enough points, so they wanted to put somebody who was going to score more points and get them into playoff contention, all that good stuff, right? He says, okay, boom, I'm not sponsoring you anymore. I say based on I was sponsoring a Minority Driver who's also a military member and a vet, but when this story originally broke, Eddie Perez and his right-hand man had two completely different stories. One was, hey, there was a margin call, we just can't do this anymore. And the other one was like, no, I sponsored your driver, not the team. I have a feeling that the contract's going to say you sponsored the team, or maybe the contract wasn't clear cut and there's just bad lawyers all around. To me, for a motorsports team and a big time lender like EPM,
it's not the case.
Probably not the case.
Yeah.
Probably not the case. So the contract's probably clear cut and dry. They're fighting this in the court of public opinion. I think the market had a lot to do with it. Everybody saw this dip coming. Everybody saw refinances drying up. Everybody saw this coming. This has been talked about for a while. If you're in the space, Eddie is smart enough to know that. Now, if I was Eddie, would I be battling this? I probably would be battling this because if it's a difference between my company staying in business and my company going out in business, I got to do what I got to do, right?
Well, and it's extremely smart. And plus, I mean, that is, regardless of if the margin call or whatever had something to do with it, that the market had something to do with it. I mean, it does hurt the value that he's getting from that sponsorship.
Can I ask you a question?
What?
My question is this. What's going to cost more? Finishing up the sponsorship or paying the lawyers?
So the finishing up the sponsorship was $387,000.
$387,000 to finish up the sponsorship. And that was my question. What is going to cost more?
Yes. I do not know what the lawyers would cost. I'm thinking the sponsorship probably be more, but it's still going to cost a lot.
Do we have another?
Now, is he going to have to pay lawyers and still pay the rest of the contract?
Probably. Do we have another story, or are we going to the next segment?
Yeah, we can kind of go from there. So what do you want to remind? Let's remind people to hit that subscribe button, ring that notification bell, click like on the video, and leave some comments. Let us know your thoughts on it. Why do you think EPM is not following through with that sponsorship? Do you think it is because of the driver? Or do you think it may have other reasons? Let us know. And also follow us on all social media. That is Facebook, Twitter, Instagram, TikTok, LinkedIn, YouTube, Rumble. Anything?
I think that's it.
That's it. All right. We got to get that written down to make sure we hit everything every time. But, all right. So, moving on to the next segment. I know you've been, doing a lot of research too. Do you have anything?
A lot of research?
Yeah.
What have I done research on?
Last couple of weeks, you were like, "Oh, I'm ready for this. I have something for this next podcast."
I've been doing a lot of research. What was the topic I was talking about?
Oh, I have no idea. You didn't tell me. You just said you're ready for it.
Yeah, I'm ready. I like bringing energy. I'm all kinds of ready. I've been doing a lot of research on stuff that I'm going to be writing some long form stuff.
Okay.
I've been doing a lot of research on.
Anything you want to talk about right now? Or?
Yeah, I kind of want to give the people a view of what I've been looking at. So I went back all the way, I'm talking to the end of last year, to 2022, on articles written, whether it be Housing Wire or EPA or just different, like, Fox News, Yahoo, and trying to put a pattern together on how they write stuff. And I've come to the conclusion that a lot of it is propaganda is real. And I don't think it's propaganda in the truest sense of the word of like, hey, somebody's influencing this. These are propaganda channels that are pushing a narrative. I think it's just people are lazy now. And before they actually read a letter, there's no investigation, or read an article, there's no investigation into that article. And I don't think it is just like politics. I think it's also in finance and business. And if you're hearing about it, it's probably too late. And there's a certain narrative they're pushing. And it's all about getting clicks, click, 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 instead of being right.
Clickbait culture.
It's a clickbait culture is what it is. And so to me, it's almost like a propaganda. So they're pushing a certain narrative based on where they work. And as soon as they switch to a different network or a different website or a different newspaper or whatever that they're writing for or whatnot, they change their narrative a little bit. And I also think that there's a lot of people who just believe big banks, credit unions, and big time retail mortgage lenders, right? And they believe them in the sense of that they're the best, and they are not the best. And I'm putting a lot of stuff together on why that is the case. And I'm not trying to sit here and bash the people who work for those companies because I know that they're good people. I'm not trying to sit here and even bash the companies because they're in business to make money. But at the end of the day, let's go back to It's a Wonderful Life. We're George Bailey and they just aren't. They're Mr. Potter, right?
Yeah.
It's all about money and profits. With us, yeah, we want to make money and we want to stay in business and we want to be successful. But we also want to help people. So there's a lot I've been doing on that. And then, I've kind of tied some of it together based off of like the stories on interest rates and where the economy is going and, this, that, and the other thing. And there are people that are pushing a narrative. And I just wonder, are you not educated? And they aren't. Like, we're the professional in this space. We're in this space every single day. The world's not ending. The world's not ending. This isn't 2008 all over again. So you're going to see some stuff on that as well. We're coming out with some educational videos just to educate first-time home buyers, even people in homes. Those are coming probably as soon as next week. I know Donovan's sitting here and being like, oh, man, they've been saying this forever and they still haven't gotten them. He's right, but listen, I had a child and you're lazy. So, there's that. So it's one of those things where I've done, with my baby girl being born, I've been able to sit back and read a little bit more. I haven't had to come into the office. I haven't been prospecting because, it's hard to prospect with a screaming child, right? And she's been great. She doesn't scream that much, but you know what I'm saying? Like getting stuff going and rolling and new technologies. I've been able to kind of see and have some clarity and have a little bit of a break per se. And it is very obvious that there's a lot of people who don't know what they're talking about when it comes to the housing market. There's a lot of people who are pushing a narrative and they're doing it for clickbait. It's that clickbait propaganda. And then there's just a lot of people who are just uneducated. So I'm going to bring education to the people.
Yeah.
I almost feel like I almost feel like the mortgage version of Jesus. I'm here to save y'all.
That's going to get some views.
Donovan's like, hell yeah, I got a clip. Ben, what do you got for me, though? What's this next segment?
I'll get to that in 1 second. I do want to say, just based off of what you said, too, something that I will tell everyone out there is go to an article, look at a mainstream news article, look at the headline, and actually read the article, then look back at the headline and see if it makes any sense.
Like, what do you mean look back at it?
So see actually how it relates to to what the article is.
Meaning if the article and the headline match up.
Yes.
Okay.
Because the vast majority of the time they don't, like, at all.
Right.
They'll be either the opposite or something that just is completely almost unrelated. Once you actually read the context of the article.
Absolutely.
So because people don't have time anymore, so they don't actually read the articles, because you said journalism isn't what it used to be. I mean, the articles actually aren't wrong, but people don't read the articles. They don't read the full articles.
See, that's the difference between me and you.
What?
The articles are wrong.
But if you actually read the content of it.
listen, I've read a lot of articles, and the articles are flat out twisted. They take things out of fact. It's like the president of the United States tweet talking about 311,000 jobs, but not giving context behind it. See, that's the difference between me and you as well. I consider the people who do that and don't give the context, I consider them liars, even though they aren't actually telling a lie. They're misrepresenting the truth, which is a lie to me. Whereas people are like, "Oh, Nick, you're so straightforward." Well, at least you're getting the facts, and the facts as I understand them.
Okay, I agree to it, but if you clicked on the tweet and then it pulled up a bunch of different information that was actually factually correct, that's what I'm saying, that they're putting the truth in there, but it's under a false label, which most people don't even read the whole thing.
Gotcha.
So, I mean, I'm agreeing with you. I'm just saying, like, if you actually take the time to do the research, if you have the time to do the research, look at multiple sources always, and make your own opinions, because that is actually how you're going to get actually knowledgeable in situations. Agreed. Don't take anyone's word for granted.
That's like a challenge. Challenge the people. Read the articles.
Exactly. Read the articles. Read multiple sources of articles. Don't just look at one. All right.
Well,
go ahead.
Multiple sources, but all the mainstream articles are the same shit.
Yeah, pretty much.
So read a mainstream article.
Actually tell you much.
Read an independent journalist article. Watch an independent YouTube article. Watch an independent news station. Watch a mainstream news station, and then really they're forming these opinions based off of different reports that come out, like the CPI report. Actually look at the report and try to understand it yourself. Try to find somebody who has knowledge of it, who does that, and who reports on it, that you trust. Just because they work for the Wall Street Journal doesn't make them trustworthy. You know what I'm saying?
Right.
So
I agree. All right, on the next segment here. So the housing market. So Realtor.com came out with an article stating that the housing market is 6.5 million units short. Breaking news, by the way. This article came out 2 days ago. I mean, I feel like this is something we all know. I mean, it's more of an exact number, I guess, but there is a housing shortage out there overall. And we just talked about it earlier. I mean, CoreLogic says that they were projected nationwide for a 3% gain, much higher here in the Carolinas where that is our home.
So if we're short 6.5 million houses, how is it only going to be a 3.6 gain?
3% gain? Because it's not going to gain much this year. They're expecting it next year. I think that's probably low.
3% is definitely low.
Right.
It's going to be closer to 6 on a nationwide and closer to 15 here in the Carolinas.
I mean, I agree. And this 8.6 is what they're saying for the Carolinas. However, I mean, U.S. housing index just came out with the new one. The number one housing market for that index was Raleigh in the country, followed by like Durham was 3 and Charlotte was 5. So there is a ton out there in the Carolinas. Myrtle Beach was on there. I think what is it?
Myrtle Beach is on there.
It was like Myrtle Beach was
Dirty Myrtle made that list.
16.2% year over year growth in Myrtle Beach.
You want to know what I love about Myrtle Beach?
16.2% growth.
First off, Myrtle Beach, you're about to make some money if you own a home.
Yes, you are.
The second thing I love about Myrtle Beach is y'all fucking embrace it. And what do you embrace? One of your best beers is called Dirty Myrtle. Myrtle is dirty, man. But here's the thing is Northerners love it. When I was growing up, we're going to Myrtle Beach. And I got there, I'm like, what in the hell am I? Like, Hilton Head's way better. Hilton Head's way better. Charleston is better.
Hey, don't knock Myrtle.
Oh, I'm knocking Myrtle, and I know you're from there. And sorry, Joey and Mary Jean, but that's Ben's parents, by the way. Maybe I shouldn't say their names publicly, but we don't have enough viewership for it to matter anyways. Ben grew up in North Myrtle, so it's not even Dirty Myrtle. That's the rich person version, but it's still not as rich as the rich Hilton Head or Charleston area. But man alive, good for Myrtle Beach. 16.2% increase in home value. Good for you. That's wealth building. If you don't own a primary residence or any properties at all, if you did own one, you'd gain in Myrtle, Dirty Myrtle, you'd gain 16.2%. Plus, there's a very good Italian restaurant there that I go to every time I go, called Crave. There's not a bunch of great restaurants in Myrtle.
There's a few.
Not compared to Charleston or Hilton Head.
No.
And then there's
not Charleston.
And even the golf courses aren't as good as Hilton Head, but they get this whole thing of like that they're great golfers. Am I just bashing Myrtle Beach right now?
Apparently. I mean, I don't.
Their best beer is called Dirty Myrtle. Like best IPA that it's made by a brewery in Myrtle Beach, and it's called Dirty Myrtle. I don't think, Donovan, is that bashing something if I'm just saying that they embrace their culture? Well, people call me a Guido, and I'm like, bring it on. I might have a chin strap next week on this show. So,
all right, we'll hold you to it.
I'm not. Yeah, I mean,
I feel like we guys should talk about the thing that we got like the most viewers on TikTok, because everybody was going back and forth about the 30-year mortgage versus the 15.
What were they saying on TikTok about the 30-year versus the 15?
Yeah,
I got to
hear
go
it.
and sit. So I took a couple weeks off, and our TikTok's blowing up. So great work to you, Donovan. You should be you know what you should be? You should be the social media Don. You know why?
Right.
Because they call like the mafia boss Don, right? The Don. Well, you're the social media boss, so you're the social media Don.
Someone said 15-year mortgage is stupid. Get a 30-year and pay it off in 15. You can always pay more, but you can't pay less. 30 years of interest is like not the best. 20% down is a pipe dream.
Okay, so let's address one at a time. Turn your mic on real quick, and let's do the first one. I think this is a great way to do the last segment. I think this is going to create some highlights. So what we're going to do going forward, since we actually get social media comments now, is we're going to start reading out some of the social media comments. Is there any way to cut the comment and actually show it on the screen?
We can put it on the next episode for sure.
Cool. We'll do that for the next ones.
Oh, I can kind of put it on this one as well. We can put it on YouTube. Yeah.
Okay. So we'll do it for the next time. We don't want to mess around too much on the show because we're still learning this technology. But next time we'll go ahead and we'll actually pull what you can do, Donovan. You play in the last segment. You pull some of the comments that are most interesting to you, and then also you catch me off guard, so I might start insulting people. That always gets viewership. Have you ever heard that saying that no publicity is bad publicity?
Sure did.
So hit us with the first comment. Let's get our thoughts on this because this video had 60,000 views.
60,000 views.
Oh, we have a video with
Insane.
60,000 views. Who was doing most of the talking, me or Ben?
Both of you guys.
Oh, we were both talking.
Someone said 15-year mortgage is the dumbest move you can make.
15-year mortgage is the dumbest move you can make.
So someone asked why, and they said, because it's a secured debt. Why would you want to give the bank its money back faster when you can earn more in the market?
I agree. Dave Ramsey doesn't. Was this the one where we talked about Dave? Can you?
Yes.
That is.
Hold on. This is what we need to do.
That is
Can
a
you
really
play
good
the
topic.
clip for us? Just play the clip.
I'll put it out.
Yeah. Just play it so people can hear what we're talking about.
You know what I like? You know who's absolutely pissed? Who? At both of us right now? Dave Ramsey. Well, he says 20% down, 15-year mortgage, and that advice is great advice. That is great advice, and that can work. But there's other ways to make it work as well, right?
What Grant Cardone also said, you don't buy a house if you have $1 million in the bank.
Grant Cardone's an idiot.
Yeah. I mean, Ramsey says a lot of good things too, but
He does, and I agree with it.
I disagree with that piece. And the reason why, and I'll just say real quick, is because a mortgage is, it's the everyday man's ability to build wealth because it's financing spread out over 30 years. There's no other way. In most countries, you can't even do that.
No.
This is one of the very few countries out there. I think us in Canada are the only ones with the availability to have a 30-year mortgage that lets you spread out those payments, that gives you the cash flow, the benefit to your cash flow, that allows you to buy a home, finance it at 97%, like with only 3% down payment, 3.5% down payment, whatever you're able to get.
You know who's absolutely pissed? Who?
First off, how the hell did we get 60,000 views on that? I did not think that was controversial. Maybe
I mean,
I know that it's a great great
topic.
It's a great topic.
Yeah.
So, Donovan, read the first one again. The first comment that you wanted our opinions on, because we're going to just respond, and then we'll go on. Maybe we can go on. You and I will go on TikTok together, and we'll respond to someone. We got 3 minutes.
15-year mortgage.
Yep.
Someone said 15-year mortgage is the dumbest move you can make because it's secured debt. Why would you want to pay the bank back its money faster when you can earn more in the market?
So, based off of what we talked about in this episode, it's not actually the bank's money; it's your money that they're lending out.
Yes.
And I'm with you. If I can have less of a payment, and then I can leverage the additional cash flow that I have because I have less of a payment into a good investment that earns more than the interest rate that I'm making, then I'm making a profit. But I don't think that most people are smart enough to do that.
Correct. I mean, we just talked earlier this episode about how do banks make money. Because they take the money that they have on hand and they use it to generate more money. And that is what you can do. Now, I mean, you need to look into your options because paying down additionally, but it is going to provide some value. So look into your option, but having yourself stuck with a 15-year mortgage that you can't get out of is, I mean, you're handicapping yourself because you're having one option that you're locked into for 15 years. Well, you can't move it. You can't adjust.
And that's what they're saying. Like you can always pay more, but you can't pay less.
Bingo.
And then the other piece to that is if you locked in that 15-year mortgage 2 years ago and your interest rate is say 3%,
Right.
there's zero chance that you're going to refinance that 3% and go to are you going to go to a 30-year 7% and pay the same amount that you're paying on the 3% 15? No, you're not. And so when I say people aren't smart enough to make an investment that's going to make more than what their interest rate is, I don't mean smart as like they're dumb. I mean ignorant to the fact and how to do it because it's hard.
Yeah.
And it's a risk. So where the Dave Ramsey comment comes in is he says pay off that mortgage as quick as possible so that you have less debt, so that you have more cash in your hand. Where somebody like myself, I'm going to leverage myself but not over leverage myself to where I'm earning more cash flow. So I'm increasing the cash flow. Now, before you make that decision, let me tell you, I've lost a lot of money trying to do this. And I learned things the hard way. I call it the school of hard knocks. So I agree with the 15-year. I'm not doing a 15-year if I can do a 30-year and still pay it off in 12 by paying extra.
But someone said, do the math. Look at the difference you pay in interest on 30 years versus 15.
But if you pay the extra money per month,
Right.
cut the
Look at what
back,
you do with the money.
A couple of things. One, you're not paying more interest if you pay the mortgage off quicker. You're paying less interest, and it'll be equivalent to a 15-year if you pay it off in 15.
Well, you get a little lower rate, but
Yeah.
at the same time, that flexibility matters,
Right.
Like because there's other things that you can do with that money that will generate
And
more
that's what I
money
was getting
than.
to. My second point was, what can you do with the other money, right? So
Bingo.
I'm in a 30-year mortgage. Guess what? Just closed on an investment property today.
Yep.
Closed on the second one back in November, right?
Yep.
That we're turning into a two
Exactly.
unit. So I would not have been able to take my extra funds in a 15-year mortgage. I would have been paying a lot more for that 15-year mortgage. And guess what? My house's value increased at a higher percent than what my interest rate is. So my primary residence increased at a higher interest rate. I took the extra money that I would have been paying on a 15-year. I put it into a bank account. And shout out to my beautiful wife, Liz Campo, who pushes me to do smart things, because back in the day, I would have been like staying on the bar, taking shots and throwing dollar bills in the air and saying baller. But anyways, long story short, I now own two investment properties, which is going to be three doors. One of them's 2 acres of land. Donovan loves this one. Like, it was so clean when we got there. He was like, this is great. But and we're coming out with a video on that, right? On what it is. So long story short, yeah. I would not have been able to do that paying a 15-year mortgage, because it would have taken up all. So now I've generated more cash flow. So I'm actually making more money, even though I'm in more debt, but I'm gaining appreciation, and paying someone else is going to be paying down. So
Right.
There was someone that mentioned that also, like, if you didn't buy a house during COVID, then you kind of got left behind the cycle.
if you didn't have a house during
If
COVID
you
or
didn't, like,
before,
pay for a house.
you lost so much money.
Yeah.
Like, you lost so
did.
much money in wealth. But listen,
But you're still not behind, because you can still
you are behind though, because
Well,
it's compounding.
you're
Are
correct.
you gonna see a 22% gain in a single year?
You're
again?
behind, but what I'm saying is not too late to start.
It's never too late to start.
Exactly, because this is still a good time to buy. We just talked about that numbers, 6.5 million shortage in housing. So we have a supply issue. So that means that you could still a good time to buy. Houses are still going to appreciate.
They're going to appreciate, and depending on your market, they're going to appreciate faster. And
Right.
what I would say to people is, like, look at it from a market by market standpoint. You
Yes.
want to diversify your investment. You might want to diversify your market as well.
Yeah.
So that is, to the person who said you got left behind. Yes, they lost out on, housing prices went up by 50%. Even if I think they've dipped about 10% here recently. So you're up 40% in the 2.5 year period, dude. Like, what?
Yeah.
That's a lot of money.
Yeah.
Do the numbers on that. Like a $300,000 house that increased in value by overall, like a net increase of 40%. What is
It's
that?
a ton of money.
Do it. You have your calculator. Do it. But let's let the people know. If you bought a $300,000 house in 2020, it's increased in value by 40% because of the COVID-driven increases, people moving to certain areas. What is the house worth today?
By 40%?
40%, because that's what we're looking at. Like here in the Carolinas, we're looking at 40% increases in some places. Raleigh,
420.
Wow. So you just made $120,000 in 2 years by just living in your primary residence. Again, Grant Cardone says that you don't want to buy a primary residence till you have $1 million in the bank. Donovan, you want to know what I think? Grant Cardone's an idiot. You're telling, where else can you get a $120,000 gain without having to do much other than live in the place? Because you're paying rent typically if you don't have but you're not getting that $120,000 value renting. I think that's more of an argument to, why we're right and my haters are wrong. What's the next comment, Donovan?
Hold on, let's do this real quick too.
What?
So just looking at the payment difference. So for $300,000, if you bought it in, let's say in 2020 at what, a 3.5% rate?
At the most, I mean, 2.875 on the conventional is what I was getting. High credit score people.
Right. So that's $1,347 as a 30-year fixed payment. If you did it in a 15-year, you'd probably get with that same 2.75. You get a little bit of a discount there on interest rate. You are paying $2,035 a month.
So it's an extra $400 to $500 a month.
$600 a month. That,
$600.
Yep. But what can you do with that $600 a month?
Multiply that by 12. Let's show people the year-over-year savings on a 30-year versus 15-year from a monthly cash flow standpoint. Because that's what you have to look at, right?
I mean, that's $7,200 a year.
So that's a down payment on an investment property in 2 years.
Right. And that's $14,400 in 2 years.
And we're not saying take that extra cash flow and go out and spend it. Take that extra cash flow, put it into another investment.
That's how, yes.
And that's why I would argue for the 30-year. I think it's the best thing that's ever happened to the American people.
Because guess what you did with that down payment that you put for that $300,000 house you bought? You just made $120,000. Now you take that extra money that you put it into a new house. I mean, it's not going to be $120,000, but you're still make what?
I would even
$60,000, $50,000.
Right. So I would even argue that you take it as a cash out, you rent out that house, you continue to gain. This is a house. You want a house hack? Here it is. So in 2020, you bought a house that's worth $300,000, right? 2 years later, we've had about a 40% gain overall, 30, 40, 50% in some markets, right? You're at a $420,000 value. I would take a cash out on my primary residence and move that up to an 80% LTV, and I have that money now, right? So I have this pile of money. It's sitting in my bank account. And I would buy a Lamborghini. No, I'm just kidding. I would not do that. Do not buy a Lamborghini. I would then take that money and put it as a down payment on either a new primary or a new investment property. And then I would be cash flow and make sure I'm cash flowing on it, right? So, or maybe I spread that $120,000 out and buy a bunch of $100,000 houses and I have multiple units, or I rent out the house I just took the cash out on and buy a new primary and upgrade my family. Maybe I had a baby, right? And I need another room. So now I've upgraded my family. I'm renting this out. And this person who's living in my house is now paying for my rent. They're paying for the higher interest rate. They're paying my mortgage. They're paying interest rate. I'm gaining the appreciation here in the Carolinas of 9% at the low end. I think 15%, right? So I gain 15% over the next 12 months. You know, I'm making money. That's a house hack, right? That's a house hack. Another house hack that would be cool is I told my brother to do this, and he's being smart. Go and buy a house, and he's 21 years old. He's going to buy a house. He's doing an FHA loan, right? And he's going to rent out the other 2 rooms because he's in college, and that's going to cover the mortgage, and he's gaining the value, and he doesn't have to pay anything. How about this? You want to know another one?
What?
If I was a single man, if I could do it all over again, which I don't want to. I love my wife and my family dearly, and I love the business. I don't love you, but you're cool. I would go and I would find a 2-unit property. I would say it's a primary residence. I would do an FHA loan on it. I would live in one unit, rent the other unit out, and then a year later I would rent the unit I'm living in out, and I would move into another 2-unit all the way from the time I was 22 to 30, and I would be a multimillionaire by 35.
Yes.
And you use 3.5% down payment each time because those are primary residents.
You're kind of like speaking on what someone said, because someone said a home is a liability and not an asset as far as building wealth unless you're taking mortgage on an investment property and not personal residence.
And I disagree with that.
I do too. Here's why I disagree with the home being a liability, because you're gaining appreciation. Yes, you have to pay for it, and that is a liability. Dave Ramsey calls it a liability.
Well,
he does. He calls it a liability because you're having to pay. So what they're saying is you're having to pay on something, but the problem is what they aren't saying is you're paying something down, so you're gaining more equity by paying down the principal. So you're paying down the principal, so yes, it is a liability that you have to pay. However, the other piece is they aren't taking into consideration the appreciation,
right,
or the fact that you could sell the home and get out of it.
Or correct, or you have to always look at replacement costs too, because what are you doing instead of owning a home? You're paying rent, something that scales up each and every year. So, I mean, you not only do you have, like, yes, there's an expense in a home, and the first, 2-3 years, it's probably going to be a little more. But year 3 comes, you're paying less, and you're going to keep paying less because, and we talked about the value of a 30-year mortgage. You're locked into that for 30 years.
Right.
for a fixed interest rate.
100%.
So I don't understand how it is a liability in that context because
I don't think it is liability. That's somebody who saw a TikTok video, and were convinced. What was your question, Donovan? You started to say something.
Well, they were just saying like interest, insurance, maintenance, all of that takes a lot of money.
It does take a lot of money.
It does.
That's true, and that's why I also say not everybody should buy a primary residence right now. Right. There's some people who should not buy a primary residence because it's not the right time in their life. There's always going to be opportunity out there to make money.
Correct, but people who think that it's not a good investment, that's who we're trying to reach. I mean, we're trying to reach everyone because it is a good investment.
I want everybody to know that at some point in your life, you need to own a primary residence, and if you want, you can build wealth through real estate. That's what I want everybody to know. It doesn't mean right now is the right time for everybody.
And you know what? I take it back.
Okay, take it back.
Real estate is considered a liability. You know where it's a liability? On your taxes, because you can write off owning a home and interest on your taxes. You cannot write off rent. So you're talking about the extra expenses. Guess what? You're going to save on your taxes owning a home.
Right. But that's also not the reason to buy a house. It's a benefit of buying a house.
Exactly.
But I will also say this. You just said something that a lot of people in this country think is very controversial now, that you should try to pay less taxes. I think that you should try to pay less taxes. Yeah, there's a lot of people who think it's controversy that people should be paying more and contributing more, even though they're now, if you make over $400,000, the government's now going to take 39.6% of that.
Look, my thing, if
39.6%, they're almost like, that's a huge cut.
If the government is out there, yes, if it is legal that you can do something, take advantage of it and do it. That is a smart way to do things.
Do you know what's theft? Taxes are theft. Taxes are illegal. Taxes are unconstitutional. Donovan, when you get your paycheck, did you wish the government takes less taxes so that you would have more money in your pocket?
Yes, always.
Do you think, and you can answer however you want, I'm not trying to call you out, but I know what Ben thinks on this because he copies everything I say. I'm just kidding, Ben. You don't. He's
First off, I don't.
No, most people who are in business think this way, but do you think that you make better decisions with your money than somebody else can make with your money? So do you think that if you get your paycheck, right?
Yeah.
When you get that money and you pay your rent, you pay your bills, you buy food, you go out and you have a good time with your friends and family, things of that nature. Do you think that if you're making good decisions with that money, do you think that if you took that money and handed it to somebody else and then they made the decisions of what you do with your money without consulting you, do you think that your decision making would be better than somebody who's just telling you?
I don't know. I don't think so.
Right.
Right.
So the government takes our money and doesn't even consult us on what they're doing with that money. And, you want to know what I would be really happy with? If they improved our infrastructure instead of sending a bunch of money to a foreign country who's fighting a war with another foreign country that who cares?
You know, who would do that?
And obviously I don't say who cares about the people in the country who are getting hurt because I do care about that. I don't want people getting hurt. But we shouldn't be so involved.
We shouldn't be, printing more money than the average, than what the total savings for the entire country.
Let's change the subject. I don't want to keep getting political. What's the next comment, Donovan?
Someone said Dave Ramsey costs many people home ownership, but then someone else disagreed and said his advice teaches you how to not be house poor.
I wish I had more context on what they mean about how he cost them home ownership.
Yeah. Probably because of talking them out of it, from saying you need to do a 15-year. Most people, that's a cash flow thing. A lot of people can't afford a 15-year because you're buying.
Right. It is a cash flow thing. So maybe he has talked some people out of it. But what he's also done is if they actually follow his plan strictly,
right,
they've paid off all their debt.
Yeah.
So then they gain more cash flow by paying off their debt. And then they do what? They put the money aside and they are able to do a 20% down payment with a 15-year mortgage.
Yeah, someone said if you listen to his podcast, he suggests 20%, but he isn't against 10% down. So
yes,
it just depends, I guess, how much you put down.
So Dave Ramsey's old now, and I have a lot of respect for Dave Ramsey. I did Dave Ramsey to get out of personal debt.
Yeah. It's great for personal debt.
And Dave Ramsey's speaking to a crowd that doesn't have self-control.
Yeah.
So if I was talking to somebody who I watch go out and take, $300 a weekend taking shots and partying and eating out and so on and so forth, I would tell them you need to follow Dave Ramsey. Make a budget, know where every single dollar is going. So we should be doing that anyways. That's financial literacy. Don't gamble with your money, right? Dave Ramsey also says that if you have enough money, you can put money into certain things that are riskier. But until you have enough money, don't risk your money, which I think is a good concept. So, and he's not against the 10% down, I don't think.
Yeah, someone said he teaches you how to have self-discipline. Nobody has taught more people to become wealthy than Ramsey.
That's true.
Oh, agreed.
He creates what you call an everyday millionaire, right? An everyday millionaire who like there was a bus driver. I watch his podcast, right? I watch his YouTube clips. There was a bus driver on there who got paid off all of her debt, worked on a bus driver salary, which was $36,000 a year, invested and had a budget and invested the way Dave Ramsey says to invest. And guess what? Retired with over $1 million in a 401k and is going to be living very comfortably. And here's the other piece that the Dave Ramsey plan, the total money makeover teaches you. There's 7 baby steps in it. And one of the things it teaches you is when you get rid of that debt, your stress goes away.
Yeah.
So that's the other thing. Like, even though you might be able to invest in something that's earning more than the interest that you're paying,
Right.
there's a stress involved with that because there is risk. So if you like to live a good life, a happy life, you can be debt free, making investments and budget your money to where you can still go out to eat. But Dave Ramsey does teach discipline. And he's teaching people how to have self control, and this country needs more of that.
Right. And he also helped a lot of people too, because those credit card debts, like with those interest rates right now.
Oh, he's helped way more people than he's hurt. Another person that he's going after is timeshares.
Yeah.
Wow.
Yeah, it's a money pit.
Well, no, he's going after him hard because of there needs to be some regulation around timeshares. I mean, it is just not right, and it costs so many people so much.
What do you mean by that?
You think timeshares are good?
No, I don't. But what do you mean by unregulations?
Meaning, like, you're allowed to be into this like lifetime contract where there's no way of getting out of it, and you can't. You
can't donate them.
Can't donate them. Can't like. There's
a
nothing.
lot of times.
Right,
Yeah.
and they're impossible to get out of. Like they're written in a way that they're impossible to get out of, and life changes.
Yeah.
You want flexibility and options, which is why I argue for a 30-year mortgage, because you're paying less and you have that flexibility of your cash flow and stuff. Yeah, not a fan of the timeshares, and we can get more into that in a different episode. When I see
the last comment says, big surprise, people whose income depend on you getting a mortgage recommend you get the biggest mortgage. You agree? Disagree?
The biggest mortgage, so they're taking 30 years as the biggest mortgage.
They were talking about you guys. They said people whose income depend on you getting a mortgage.
So we pretend our income depends on them getting into a mortgage.
But what do you mean by where do we recommend that they get the largest mortgage? The 30-year, we don't get any different.
Yeah, no, we get paid the same whether they get 30-year, 15-year, 10-year, 5-year. So the comment is it's an ignorant comment. Yeah. And I don't like ignorant means they're just uneducated. What was the username?
It'll be great.
That's the username. It will be great.
Yep.
So it will be great. Let me help you become great.
So
the biggest mortgage, a 30-year mortgage is not the biggest mortgage. A 30-year mortgage is actually the smallest payment on the same size mortgage as if you got a 15-year, right? And here's the other piece is if somebody was to ask me, hey, should I buy a $400,000, $300,000, $200,000 house? I would tell them that they should buy what they're comfortable with. So when Ben and I are having a conversation with a client, we give them multiple different options. We'll give them a 10-year, a 15-year. We'll give them different loan programs, different loan options, different down payment options so that they can see a breakdown of all the costs and all the payments on it's called the total cost analysis, and they know every single dollar. So if they're going to buy a home, which people are going to buy homes, we are going to give them multiple options. They'll look at the options and then they'll decide. We aren't here pushing anybody to get into a mortgage. We aren't pushing anybody to buy a house. We aren't pushing anybody to do anything. We're saying it's a smart decision if it's the right point in your life. And then we're going to give you the facts and the information. We're going to be a tool for you to be able to make the best decision for you and your family. You will never hear me tell somebody, buy the $400,000 house, because that's the biggest mortgage, right? Not $400,000, but if it was a $400,000 versus $200,000, you would never see me push somebody to a $400,000 instead of a $200,000 because of compensation or benefit to me. I would never do it. I tell people 30-year and take advantage of the different, because you're gaining equity and you're gaining appreciation in the home. So It will be great. You should become great. And, before you judge us and trying to push something just to make money, maybe get to know us.
Right. I mean, our job is
watch
to
our full
educate.
episode.
Our job is to educate and provide options.
Period. I'm a tool.
Which is what we do.
And you want to know what I love?
What?
Watching people succeed.
Right.
I mean, Donovan's been crushing social media. Have I not told you that? And I seem pretty damn happy about it. And even if it wasn't my social media, if it was Ben's social media, I'd be a little bit jealous. But I would still say you're doing great. Now, whatever you're doing there, fuck, do it for me too. But I'm pretty. You've worked with me for what, 4 months now?
Yeah.
Would you say I'm pretty straightforward and honest in what I'm thinking?
Yeah, very much so.
And you can be honest. Do you think that myself or Ben ever tried to take advantage of people?
No, I don't think so.
I don't either. No, so I disagree with
so.
that comment wholeheartedly, because if we were pushing people to get people try to paint everybody else in a picture. They try to paint them in a light that the narrative that they see is painting them in. Just because we have a podcast and just because we're on TikTok and just because we're in mortgage doesn't mean I want to push people into a situation to where they're going to fail, because guess what? I believe, my personal belief is I'm a Christian and I'm going to have to answer for my actions here. And if I'm pushing you into a situation that's bad for you, I'm going to have to answer to that someday.
Correct. But we do what we do because we believe that buying a home is a great investment for people and a great option to have, and that we can help people. I mean, that's why we do what we do.
And we also have this podcast because we're trying to fight back against narratives that aren't necessarily true, and we're trying to give you the actual information of people who are in this industry every day and see this industry.
Correct. Are you guys saying that happens in the industry though? Like other?
Yes.
Yeah. I mean, look at mainstream media right now. I mean,
no. Let's not go down that road. You're asking if other people in the industry, if they push people into the biggest home. There's realtors who do it, who I won't work with. There's other mortgage people who will do it because we're commission-based employees. Well, I'm not an employee, but we're commission-based. We make a percentage of every funded loan amount. So there's probably mortgage brokers who do it. There's not everybody's good.
Right. I mean, we wouldn't have had 2008 if everyone was.
Yeah. 2008 was caused by people pushing people into stuff they couldn't afford. And then when the interest rates went up because they were pushing them into ARM loans that had no adjustable rate mortgages that had no regulation around them and weren't capped, the next thing you know, people couldn't pay. A bunch of houses started foreclosing. And then there's a huge amount of supply and not a high demand. And it just tanked the big banks and everything. So and also the bond ratings and stuff were corrupt. So there's corruption everywhere, but I just pride myself on not being one of those people. So in this industry, are there people who do push mortgages that are maybe, someone's not necessarily comfortable with? Yeah. To answer your question, are there realtors who try to put people in the most expensive house because they'll make the most money? Yeah, but you want to know what? You want to know I am successful at what I do? Because I would say I'm pretty successful for a loan officer, especially within the first year, doing over $20 million in funding in 6 months. That's pretty fucking successful. From that volume standpoint, I believe that people see that my intention is to never put them in a bad situation, and I'm honest. The best sales tactic is honesty. Because I'm not actually selling somebody. I'm just giving them options. I have multiple clients that just absolutely love working with us, and I've never pushed them into anything. So to answer your question, do people do it? Yes. Do we do it? Absolutely not. I actually think that part of my fight is I'm fighting back against the shady characters who are in the mortgage industry.
Right.
Like the Wells Fargos of the world.
And part of where I was going to with the mainstream media, because it's deterring a lot of people, a lot of first-time home buyers from buying a home. And what is that doing in the housing market? You look at like the BlackRock, you look at all these big corporations that are mass buying, taking advantage of it.
BlackRock's profiting off the Ukraine-Russia war?
Oh, I'm sure they are. Like it's
which is wild.
Right. And like people, you have the first time home buyers, and that's who we want to help. We want to educate them and say, hey, this can make you money. Don't let it make money for the big corporations. Here's your options. Here's what it'll do for you. Here's where your equity that you gain over how many years. We show all of our clients a breakdown.
And we go through that in every episode, and everybody needs to watch go to YouTube and watch the full episodes of what we're saying. And don't form your opinion on us based off of a 3-minute TikTok clip.
Yes.
Some people probably don't like me on TikTok, but if they hung around and watched a full episode, they'd be like, he's kind of funny. And then some people are like, man, he thinks he's way funnier than he is. What an asshole. So you might like me, but really should hate me.
And some of those people would be right.
Yep. What else?
Invite some guests onto the podcast?
Should we invite some guests on the podcast?
Yeah.
Should we like put it out there to them to let them know that they wanted to come on? They could.
Any of the people who are commenting, you're invited on. But you know what I'm going to do? I'm going to put a metal detector on them first, make sure they aren't bringing a pistol into the studio. Because there's some people, I've read some of the comments, and you got to be honest, some of the people don't like me.
Right, I agree.
Yeah, there's some people who just don't like me. That's the person I want on the podcast. The person who agrees with me, great, I'm happy you agree with me, but if you want to come on the podcast, see, I'm all about fireworks, and I'm all about having conversations with people who are different and have different opinions than me. So that's why I say, hey, if you don't like me, come on the podcast. Let's talk about it. But a lot of times the people who don't like you, they're afraid of confrontation. So they'll be confrontational online, but they won't actually have a conversation with you in person, which is why I expect you, Donovan, because you've disagreed with me on stuff, and we sat right at this table and had a conversation about it. And that's kudos. That's respect. That's respecting each other and our differences in visions and opinions and whatever, right? I even respect you, Ben.
Really? That's news to me.
Yeah. So, listen, this has been a good episode. It's been a long episode. First one back after 2 weeks. Are we good? Or did you have something else?
I mean, we've been going for a while, so I think that's good. I really enjoyed that last segment. I think that's a good way to end.
I think we need to start doing that. Can we pull it up on the screen so when we're live, people can see it? Cool. Perfect. And then that way when we go to edit the videos too, maybe send those to Zach, and Zach can edit them in, and that way when they're seeing it. But listen, first off, let me say to every single one of our loyal followers, the 60,000 people and the hundreds of comments that we have on all of our social media channels, did you ever think that we'd have a video with 60,000 people?
I did not. Not this soon, at least.
60,000 people viewed one of our videos. That's pretty wild, Donovan. That's Yep, we were getting 100 followers a week for the last 3 weeks. That's on TikTok. And then we're going to start parlaying that success into YouTube. And then Instagram's been growing too. We're almost to the point where we can go live on Instagram. So listen, thank you. This would not be possible without y'all. So I do appreciate it, but while I'm telling you I appreciate you, go ahead and bang that red subscribe button and turn on your notifications. Watch this full podcast in its entirety. Comment on our videos on YouTube and leave your Instagram handle. We'll follow you back, and we're going to be doing giveaways on Instagram, YouTube, Facebook, all different platforms, and we're going to do different giveaways on different platforms. So make sure you're watching us on all of them. We are NBI Financial Group on every single one of our social channels: Facebook, Instagram, LinkedIn, Twitter, TikTok, Rumble. I think I got them all. But yeah, we are NBI Financial Group on all of them. Go ahead and follow us on all of them. Bang the red subscribe button, turn on notifications. I'm the Mortgage Mob Star, STAR.
Oh, you changed it again. I like it.
Yeah, I don't want to be a mortgage mobster because it gives us a bad so my personal is the Mortgage Mob Star on all of it. And Ben, who are you?
Big Boss Ben.
Big Boss Ben. And if you have any mortgage needs here in the Carolinas, we are the best at what we do, and we have the best team. Shout out to our team. Shout out to Donovan. Shout out to my beautiful wife, Liz, for pushing out a beautiful daughter and still being able to do things to help our business. Shout out to all of our new team members. We hired 2 this week, and we're about to hire some more. We're growing. The goal was 20 team members by December. I think we're halfway there at this point. So
we are. We're at 10.
Cool. If you guys need us, hit us in the comments. We love you. Send us a private message. We'll get back to you. If you want to come on the show, if you disagree, if you agree, whatever, come on the show, hit us a message. We'll bring you on. There's a seat right here. I'm out. Peace.